Trading will always be a struggle for you unless you discover the secret that elite proprietary traders use. It's a simple 3-step technique, but don't let its simplicity fool you. It can change your trading career. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop number 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
Ever wondered why price action trading seems so complex, even to seasoned traders? What if I revealed a simple 3-step trick that turns this complexity into opportunity? So this may be more of a fundamental thing than some of the concepts we typically cover, but it's really amazing how many traders, even really experienced traders, can fall into these traps. So why do new and experienced traders both fall into these traps? Why do we make trading, especially price action trading, harder than it needs to be? And what tricks can we use to make it easier on ourselves? The first trick, number 1, we're going to shorten the time frame of the trades that we're going to take. When price action trading gets difficult, immediately go to shorter time frames. So where do many traders actually stumble? It's not really in generating the trade idea. The real challenge lies in kind of that subtlety of understanding the idea that you're generating and then the time frame in which it should occur. Most of us are very good at identifying what should happen in the short time frame moving forward as traders. But where people get trapped is they identify something that should happen 2 or 3 or 4 evolutions down the line. They generate a broad idea of what could happen, but then struggle to identify exactly all the steps that need to occur in order for it to happen. So what's the solution to that? The first step is just shorten your time frames. Cut them down. Make trading work for you by understanding what should happen next and taking that trade. We're going to dive a little bit deeper and we're going to actually showcase the different trades on different time frames and talk a little bit about each of them here. So investing, that's what on our desk we view investing as anything that's more than a 5-day hold period. When you're thinking about investing, you're exposing yourself to all sorts of potential risks associated with that hold time. So if you're going to hold for at least 5 days, you're exposing yourself to, macro risk, global macro concerns. What if a war breaks out? How's that going to impact your specific trade? What if the market environment shifts in that time? What if there's news specific to that company? What if there's news specific to the industry or the sector? What if there is an occurrence of a new product that occurs that kind of disrupts that industry or sector? You have to be aware of some of those factors if you're doing any sort of investing. Swing trading on our desk, or swing trades, are identified as less than 5 days expected hold times. These are often identified on the daily chart. They're often identified with a clear expectation of what's going to happen in the next few days associated with it. We're oftentimes looking for something pretty specific, which we'll actually cover at the end of this video, but we're looking for a specific occurrence to tell us that the 5-day window we have for that swing trade is likely to play out. Again, though, we're exposing ourselves to a lot of different factors to figure out how that swing trade might work its way to target. So if you're struggling at all, cut your trades down into a little bit shorter time frame. If you're uncomfortable swing trading or struggling to swing trade, go to gap trades even. Gap trades are trades on our desk that have a very defined setup going into the trade, and we're looking for one overnight gap. That's a hold time of we expect to be in our position or add to our position at the close, and we expect to exit our position right on the open. Gap trades is a really popular trading strategy in certain markets. It can be really good depending on the setup, but if you're struggling with kind of swing trading, maybe think about finding that one moment of a gap trade. All right, let's think about if you're struggling with a gap trade. What should you do? Take your time frame down to a trade to hold. A trade to hold on our desk is a 3 to 6.5 hour trade. You're talking about holding for most of the trading day. Trade to holds often are accompanied with a fundamental shift, and we'll talk more about that fundamental shift, but most importantly, they're associated with an expectation of what can occur on an hourly chart. So if you're trading a trade to hold, you're thinking 3 to 6.5 hours. You're rarely thinking about what could happen on that gap, but you are thinking about what could happen in that 3 to 6.5 hour window, that bulk of the trading day. If you're finding some variability with your trades to hold, you cut them down. Go to an intraday trend trade. Now, an intraday trend trade on our desk is a hold time or an expectancy of about 1.5 to 3 hours. If you have that 1.5 to 3 hour window, you're expecting a couple different things to happen, but the general trend of the stock to move in your direction. If you observe trends, intraday trends, a lot of times they go through that kind of run and then reset phase. We're thinking about those intraday trend days as catching that run and then being out and letting that reset phase occur. If you're struggling with intraday trends, you do have to give it a little wiggle room. Sometimes they reverse. They're prone to failure more often than the next category of trade, which would be a move-to-move trade. Move-to-move trading on our desk is a 30-minute hold time to 1.5 hours. You have a very distinct setup coming in. You're expecting the price action to move in your direction. You're open to one decent pullback against you, ideally after the move is already started, but your expectation is that the participants involved will drive the stock in that direction in the next 30 minutes to an hour and a half. That's about it for move to move. But even then, you have to be comfortable with letting it come back against you, understanding that the participants are going to drive and then pause and then look for that second drive. So if you're struggling with move to move, a very simple way to do it is just go down to scalp. Scalps on our desk are trades that occur with an expectancy of 1 to 30 minutes. They're easily identifiable because we can really see the factors going right into that setup. We can see them based on the technicals. We can see them based on the fundamentals if there's been a catalyst involved. Scalping on our desk is mostly off of the chart, less off of the tape. There are tape scalps, and we'll kind of cover those in just a second, what the hold time for tape scalps are. But most of the scalping done on our desk is trades with an expectancy of 1 minute to 30 minutes of hold time. And we're looking for a very distinct moment of price action, a very distinct group of participants to drive the stock in the direction that we expect it to go in that very clear moment. Finally, we did talk about tape scalps. Tape scalps are things that occur in less than 1 minute. The things that you see right on the tape, you identify that buyer, you recognize that this should react almost immediately. When it does, I'm going to scalp out on the momentum and move on from there. So by defining our shot clock for each of these trades, we've really helped ourselves generate better trading ideas and take what's offered. The time frame associated with all of these is what we talked about. That's the expectations based on the participation we're looking for in the trade. And then that duration of that trade, that's the time in which we expect this trade to play out. So again, the first step in making price action easier for you is in shortening your time frames. Get down to the most comfortable time frame for you and then own yourself in that moment. The reality is, it's an expectations game. It's tough to know what to expect for more than a 5-day hold period if you haven't studied that, if you haven't worked on that. It's really challenging to understand what's likely to happen over the course of an hour to 3 hours. That really can trip people up sometimes. So you do want to just shorten your time frame till you get to a comfort zone. That's the first step in really identifying the price action and making the appropriate trade for you, making it easier for you. Second step, and this is a really easy step, but it's really centered around one idea. Why do some traders thrive while others struggle? And the secret might lie in an approach that's inspired kind of by an unexpected source. You might be able to guess what it is, but because we talk about it a lot on the desk, we're all passionate about trading. Because of that passion, we find ourselves kind of presented with these endless possibilities, endless opportunities, endless chances to play the game of trading. Unfortunately, that can get us in trouble and pretty fast. So I was chatting with this trader and the other day, and they said basically like, how do you just not play? Like when I'm playing a game, we were talking about playing video games, and we'll talk about kind of the factor here in a second. But we were talking about playing video games, and he was like, video games are great because as a gamer, you just restart the game and you play again and you play again and you play again. And it's just so much fun because you're always playing. He's like, I find myself in trading, just taking trade after trade after trade because I just always want to be playing. I'm so passionate about trading, right? So we all kind of feel like as traders, we've been there, right? You want to you have that passion. You want to be taking those trades. So if you haven't felt that passion, if you haven't been wanting to be a player in the market all the time, you're either the anomaly that has so much self-discipline that even especially starting out, you're probably on a really good path, or straight up you're lying. If you're lying and you're lying to yourself, you're lying to everyone, you might as well stop watching now. We don't really want to keep going if you're just lying to yourself about like not feeling that passion for trading. If you're still here, good. We're all here and we can move forward together. Have you ever seen a boxer, like an old boxer? And it's funny when we talk about older boxers because most of them are kind of in their 30s or maybe their 40s, right? Almost every single older boxer has this horrible story about getting caught, getting injured, either in a fight or in training. Even worse, some of them can't like walk right or they can't see, or they just have this like, what I'm getting at is they have this dejected look about them when they walk around. It's like that what could have been look, right? When you go into a boxing gym, boxing gyms are often full of these guys, or these girls even. You know, they all had a shot. But some of them, and for whatever reason, some of them didn't make it. They got caught, they had an injury, something happened, whatever. We were talking about this so much on the desk, and it was a really interesting conversation. The reality is, as traders, we can put ourselves in that position. We can fight all the time, but we're likely to get clipped by something or likely to be on the not on the right trajectory. So we kind of have to change our beliefs. And this is so true from price action trading because price action trading can be so tricky if we don't come in with the appropriate belief. We need to change our focus to being prize fighters. Not just boxers, but prize fighters. We need to focus on only taking the trades, only fighting when there's a big prize there for us. So what if you could spot the big prize trades more easily? Well, there are a couple steps that we'll use to do that. So we'll first explore the setups that could kind of skyrocket your trading success. We'll learn what those big prizes kind of look like. And unlike the fighters that we talked about, those with that dejected look, we're only going to play when there's a big prize available to us. But how do we know if there's a big prize? So we're going to learn these setups that give us the big prizes, the ones where we don't have to take body blow after body blow just to scrap by. Here are some of those setups that offer us the biggest prizes consistently. The first one is day twos. The second one is breakouts, but breakouts following a specific compression in a range, a consolidation leading to the breakout. Breakouts following an 8+ fundamental or technical catalyst. Excessive extensions. Trending days. Failed breakouts. Volatility and range. And then special situation setups like breaking news. Another one is like into and around $5, something like that. Those are special situation setups. And then finally, we have the big dog consolidation setup and trend setups. So now that we're aware of what these setups are, what really turns them into mega fights, right? The answer might transform your entire trading strategy. The mega fights, the biggest prizes in trading, come from multiple setups. So when we're talking about a break out of a range, out of a consolidation, with a fresh news catalyst, or we're talking about a day two following an excessive extension, or we're talking about a big dog consolidation setup within a trending day setup. These are the biggest prizes in trading because these are when there's so much money being put to work on so many of the different time frames that we talked about. There are so many players betting at that same time. Markets are being made by so many different participants because they want to. They need to make the market in that moment. They have to play. Those are the mega fights. That's how we find better trades for ourselves. We look for the mega fights, the multiple setups. Finally, there's one thing that makes this price action trading game way harder than it needs to be. And it really seems simple. And if it was so simple, so many of us wouldn't really make this mistake. But it seems like a simple thing. You know that you've heard us say it. We talk about it all the time, but it absolutely deserves repeating. If you have ever felt stuck watching a trade that goes nowhere, how do we identify and secretly pick up on the trades that are going to move and it'll make us feel like a champion? We're going to focus and we're going to trade stocks in play. Now, let's take this a step further because everybody knows the definition of stocks in play. We talk about it every single time, but that's not quite enough. So stocks in play are we're sitting and waiting for something to happen. The general definition of a stock in play is a stock with a fresh news catalyst, a stock trading at or around a key technical level, ideally 8+ when we're scoring the technical levels, or we're looking for 3+ RVOL. Now, we did a little short on the differences in RVOL depending on the AVOL. So if you need to check that out, do that because we're getting better, and we have been getting better for a long time about not just treating 3 RVOL across the board, but understanding the balances there. So that's going to help us better identify these stocks in play. But even more than that, if we're not trading the stocks in play when they're in play, we're just adding variance we don't need to expose ourselves to. We're really kind of inventing trades, or worse, we're kind of allowing ourselves to be fooled by randomness. Let's talk a little bit more about those 3 factors, right? So when we have an important fresh catalyst, there's a little wrinkle with catalysts that we really do need to be aware of. Most people, when you hear catalyst, all you think about is the fundamentals, right? The news associated with it. But a catalyst can also be a technical setup. It can be a clear technical level, a clear support and resistance level that is broken. That can be a catalyst. It has to be a key level, but that can be a catalyst. What it does is it shifts the supply and the demand in that moment, and so it forces players to act accordingly. The elevated RVOL thing, we talked about why RVOL mattered, but it's such a sliding scale and the context matters so much that we'll make sure to layer on the foundation and then lay in the context, right? So the RVOL can put us in a position to be rewarded for our trades working very, very well. And really it's focused on that real order flow. It's looking for that unusual liquidity to increase the probability of any price action trade following through. So we talked about the different categories of RVOL in that short that we did, but what are we really looking for? If I look at a stock that's trading, say, 5 RVOL, I need to pay attention to the volume bars. And I need to be acting only when the volume bars of that stock are growing. This is so important that we're going to talk about it one other time. We can trade stocks in play, but we really want to be trading stocks in play when they are in play. So even though a stock is in play, the price action trading is going to be much easier when the stock that is in play is showing that it's in play. The easy visual cue there is just look at the volume bars. If the volume bars are increasing or the volume bars are sustaining at an elevated level, we can really look for that price action trade to work better for us, more cleanly for us, and have a better risk reward for us. By looking for that volume increase, all we're doing is avoiding those moments when those in-play stocks can play rope-a-dope with us. They can kind of get us to bite when there's not really anything there. So what we're going to really do is sidestep those traps by looking at the minute volume, using the bars on the chart, and then only trading when there is that visible increase in volume or sustained volume on the chart. It's true on almost any time frame. So going back to our first point, if you're looking at any time frame, you want to be participating when there's real participation on an in-play name. So if you're using, even reading the tape for our tape scalps, you want to see the speed of the tape increase. You want to see a visible increase in the speed of the tape. So the three-step trick's actually pretty simple, and I apologize, but it's so important to do it the right way. So shorten your time frame to reduce your vulnerability of something you can't control. Be a prize fighter, not just a fighter by only taking trades, but a prize fighter by only playing in high value opportunities. And we're identifying those as clear setups and even better, multiple setups. And then play only when the in-play stock is in play. Make sure the stock's in play, but also make sure it's trading in play in that moment. It's so important to define your trades, and it's important to know what trade you're making. So if you're looking to learn more about those 5 steps we use to define any trade, that process that we do to layer onto our price action trading, check out this video and be sure to go through all 5 steps. They may seem fundamental, but again, when we lay a really good foundation, we have something great to build on.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.